Now, it seems that KAL has started to see results from its strategic initiatives. The group is set to further invest in the diversification of its business. KAL has seen its non-agri business overtake its traditional agricultural business and bring about a new client base. Marc Hassenfuss, editor for Financial Mail, joins us now for a deeper look into it. Good afternoon to you, Marc. Always a pleasure.
Nice to be here again.
All right, Marc, keen to speak about, KAL Agri becoming KAL. It wasn't just a change in name, it was a change in the strategic focus. Let's talk about the journey of this business.
Yeah, I think the move to KAL Group takes away the KAL Agri with its agricultural reference. They are definitely still rooted in the agricultural sector, but it's a business that's morphing very interestingly. Without losing its roots, it's definitely moving into new areas, more general retail, and I must say general retail at a very, very nice margin, plus 5%, and looking to sustain that makes quite an interesting prospect.
I want to speak about the kind of retail it looks like KAL is trying to be. Is it slowly trying to, fall into the same bracket that a Pick n Pay, a ShopRite would fall into? Or is it still trying to grow as a retailer, but really going in its own very unique direction?
Yeah, no, I don't think it wants to fall into the shadow of any mainstream retailers. That would be, I think, a mistake. You don't want that kind of attention. Those other companies are a lot bigger than KAL and its brand Agrimark. But what it's done is it's stuck to its agricultural towns and roots, so it's very dominant in those areas. It's a kind of a one-stop shop now for the farming community, and I suppose others now. Back in the older, I grew up in a small town, and it wasn't necessarily an Agrimark, but there was always a co-op in the town. And if you went in, I think some of the co-ops even had to prove you were a farmer to get the discounts, and they had gumboots and wheelbarrows and spades and not much else. You couldn't buy a Coke there. The Agrimark, if you go into some of their big stores in Stellenbosch, Durbanville, it's pretty much a general retailer. So if you go there with your entire family, everyone's going to get something, from a pair of shoes to a Coke or chocolate, plus the normal fertilizers and things you would normally buy. So it's got a captive market, and I don't think it would like to really go into a Claremont or a Sandton City. I think that's going to stay very much away from those kind of big urban areas.
Got you, Marc. I also want to speak about KAL and debt. As an advancer of debt, granting its farming communities debt. I think that's a very interesting dynamic we're seeing playing out there. And then also the debt that might sit on its books. I think both of them are rather colourful stories.
Yeah, look, so the farming community would always buy, let's call it, in the old days, you'd call it on tick. The crops are in cycles. Sometimes you haven't got money and you have to buy your stuff. So they would grant credit. When the rains came and the crops grew and you sold them, you'd pay back. So KAL's done this for generations, and it shows they manage that book very well. I mean, the bad debts are very low, incredibly low, in fact. They've increased provisions a little bit now, but nothing to be worried about at all. I think they know their market very well. They know their clients very well. It reminds me a little bit of Home Choice, where it's generations of relationships, and you build on those. You learn to trust. You know who to trust. So that's not a hassle for me. I think there is a bigger cash component going through because of the general retailing. So that helps the fuel sales as well. So that's all changing as well.
I want to speak about fuel and fuel margins. If that is anything worth writing home about when we look at a KAL market here, just how great are fuel margins?
No, they're not good. Obviously, it's a regulated market. So KAL has always sold fuel. Then they did the big deal with PEG that bought them a lot more forecourts. And I think initially people thought, what are you doing? You've got a great business. You're earning a really good margin at Agrimark. Okay, sure, this expands the revenue line hugely, but the margin just diminishes, and it did. The story there is, okay, it's a little bit like the fuel it's not a loss leader, but it reduces the margin. But as they build on their forecourt business, they get the forecourts right. You get more Kentucky's in the right area, or you get more convenience stores in the right area. That margin will slowly starts building up. And I think over the years, you're going to watch the fuel business, really bring up a good part of the business and actually really carry its weight. People at first are very skeptical. I think they're on the right track, and I think they're starting to prove it. They're less skeptics now around that expansion.
Also want to touch on, their mid-caps status here. Might this be a company that slow and steadily grows to become something bigger? You did speak about the kind of attention that, it enjoys on the JSE, not as big as a retailer like ShopRite. But I mean, with this very steady track record, and we'll speak about the returns in a bit, Mark, but with this very steady track record, could it become more noticeable to investors and really increase in size?
I think it's going to be a while still. I think if you're going to buy retail, you've got some really good stocks you could buy. I mean, there's Clicks. Some of the fashion retailers not terribly popular these days, but you've got businesses that people always go to, the Woolies, etc. KAL is pretty small compared to them. I mean, it's not that small. It turns out a fair bit, but it's not going to get the attention yet. It'll still have to build more investment relations, and I do think eventually someone will look at the track record and say, "Goodness, this is." It's been pretty good over the long term, and they keep delivering. How can I keep ignoring it? And it'll be a slow burn, but people will get there.
And then let's touch on those returns, because I thought this was super fascinating. Also, just how steadily the company has managed to deliver.
No, look, I mean, if you just have to go back to the annual reports, they're all available on the website. But those are just as they were a listed company. They were always part of KAL Group when it was unlisted, and Zeda owned it or PSG owned it. So even back in those days, very good growth, steady, strong growth, not spectacular, good reinforced margin all the way through. I mean, I think you saw what the CEO said about return on invested capital. I think they're looking at 15% or so over the long term. It's a good business. It's decent. You'll get good dividends, and I think as they pay their debt down, I think it'll flow through more into dividends. I don't think they're going to do a big acquisition. I just can't see it. They've got so much opportunity. I mean, you might say, look, geographically they can grow as well because they're not in all areas of South Africa. They are still very strong in the Western Cape and then in the rainfall areas in the Eastern Cape and things like that. So that is restricted. They want to be where you can make money consistently and there's less cyclicality. So I think dividends will flow pretty strongly. I think you'll see that yield looking quite attractive and that dividend cover coming down.
Brilliant, Mark. Very interesting to read this article that you've penned for Financial Mail. Thank you so much for your time this afternoon. It's always a pleasure chatting to you. That was Marc Hassenfuss. He's editor for Financial Mail.